Don't expect the Fed to raise rates anytime soon, says Piper Sandler's, kept the tone centered on utilities and semiconductors. Welcome to your daily market briefing for 2026-04-23. We will walk through leadership, macro context, and what matters next for the next session. Here is the broad market snapshot. S&P 500 down 0.41%, Nasdaq 100 down 0.57%, Dow Jones down 0.36%. Next, the ETF curve set shows where relative strength and weakness developed through the session. Leaders were utilities plus 2.72%, industrials plus 1.77%. Laggards were software minus 5.83%, technology minus 1.42%. Across global markets, the session leaned risk-off globally, with broad market retreat across regions. Asia was under the most pressure, with Shanghai and Japan leading the retreat. Stepping back, the broad market traded with a soft tone, as SPX closed minus 0.41% and NDX finished minus 0.57%. Leadership came from XLU, XLI, while pressure showed up in IGV, XLK. The stock market fear and greed index is 66, which sits in greed. That is down 2 points from the prior reading. That suggests investors are leaning risk on and may keep rewarding upside momentum. On the S&P 500 heat map, leaders were utilities plus 2.72%, semiconductors plus 2.14%. Laggards were software, negative 5.83%, consumer discretionary, negative 1.00%. Policy expectations remain a major driver, and upcoming macro releases is one of the next data points traders will use to calibrate the Fed path. If that data surprise is hot, long-duration trades could stay under pressure. Commodity action was split. Brent led, while natural gas lagged, so the move looked selective rather than broad-based. The index board leaned lower, with Nasdaq carrying the weakest tone and Nikkei holding up best. Mega-cap curves were mostly negative, which points to a broad tone move more than a single-name story. Forex showed a risk-off currency tone, with the sharpest move in Euro-USD and the best relative strength in USD-JPY. Crypto remained under pressure, which helps confirm the broader market risk tone. Bond curves suggest yields were mostly rising, so rates still mattered for the session. The main focus stayed on leadership staying concentrated in utilities and semiconductors. The pressure point remained software and consumer discretionary. Into the next session, the key checks are the next macro events, the path of yields, and whether leadership broadens or narrows. Traders should also watch whether don't expect the Fed to raise rates anytime soon, says Piper Sandler's Michael Kantrowitz. CNBC keeps driving headline risk. That is the key takeaway for today's market. The broad market traded with a soft tone, as SPX closed negative 0.41% and NDX finished negative 0.57%. Leadership came from XLU, XLI, while pressure showed up in IGV, XLK. Keep watching policy signals, index leadership, and the next macro catalysts. Subscribe for the next daily market briefing.